Hello, I am the Stock Options Hero, and from here on out, I'm going to share with you stock options secrets that only the most successful option traders know. In my videos, you are going to see my secret options trading system that only a handful of people know. And as I'm sure you're well aware of by now, options trading can be very lucrative. However, most options traders are not consistently successful, or even worse, lose money trading stock options. Trading stock options can be a high probability trade if done properly. Let me show you. Now, each day I will record a video where I play simulated options trades. So subscribe to my channel and watch my videos daily to learn how you too can be a successful stock options trader. Disclaimer: these videos are for educational and entertainment purposes only and does not constitute a recommendation to buy or sell any securities or stock options. Before I dive into today's stock options video, I have a small favor to ask. If you like this video or any of my videos, please subscribe to my channel and hit the bell icon so you will see my videos as soon as they are posted. This way, you won't miss out on any paper trading ideas. Tell me in the comments section which option trades you are looking at paper trading, and if you're lucky, I might do analysis on a ticker symbol from the comments section. All right, let's leap into today's video. Welcome to another exciting video of Zero DTE Options Strategy. To you by me, the Stock Options Hero. Oh yeah, let's leap into it, shall we? So today, my May 17 trade was going great until an announcement came out that Biden won't let the debt ceiling or the debt talks fail, and that the U.S. won't default on our debt. So naturally, the market is rallying today, and because I entered my short yesterday, it's a little painful today. Ouch. So, before I started recording, I entered a new trade for tomorrow, for May 18, on this candle at 11:10, this bearish engulfing, because of this massive rally. We are well above the +2 linear regression level, and it's continuing to run. So let's see how my May 18 is doing. So yeah, I'm down on that one as well, which is to be expected. Am I freaking out yet? No, not really, because I had quite a bit of a buffer. So I'm short the 4160 for today, and I'm short the 4165 for... Right, hold on, I'm sorry, I'm all mixed up. Okay, so I'm short the 41.65 for May 17, and I'm short the 41.60 for May 18. Okay, so the question is, what should I do for the one that's expiring today? So let's take a look at the May 17. Oh, you know what? Sorry. I was looking to roll it. I was on the wrong screen. Sorry, I'm still waking up here. So I am short the 41.60 for the May 17 and short the 41.85 for May 18. So sorry, that looked that looked so much better. So 41.85 for tomorrow. I'm like, I thought I had more room than that. Okay, that makes sense. So obviously, because the 41.60, 41.65 is in the money, what I'll do is I'll left click on one of the legs and then control click on the other one. Then right click, go to create rolling order. Excuse me. And this is the screen I was looking at. I apologize. So to roll it over to May 18 is going to be a 35-cent debit. And if I roll it to May 19, 85-cent debit. Okay. So one of my rules is to not roll if it will cost a debit. So at this point, I am hoping for some weakness. The question is, how much higher will SPX run today? That is the question. It's been a while since I've drawn a Fibonacci retracement. It's an extension. There we go. All right. Try it from here. Say that this may be the top, right? So the main fib retracement levels are the 23.6, 38.2, 50%, 61.8, 78.6. And usually when you see a move like this, there's generally a 50% reversion. So assuming that 41.64 is the high of the day, we could expect SPX to retrace back to around 41.39 per share, which would mean our 41.60 short strike should, and I want to emphasize, should be okay. And the reason I feel somewhat comfortable with this huge move today is if we look at MACD. Look how extreme this MACD level is right now. The last time it was this extreme was back on May 10th. And what happened on May 10th? Good question. I'm glad you asked. Let's zoom in. And when we had SPX rally on May 10th, it shot up. And what did it do before the close? And this was later on in the trading day, right? So, sorry, let me go all the way out. Let's take a look at the whole trading day. So the rally didn't happen until around 11:40 Eastern. Sorry about that. And then it rallied, and then you had some profit taking. So from 1330 to 1400, there was some profit taking, and the share price reverted. So today, it's 11:55, so we still have a little bit of the trading day left, at which point the bulls may be a little nervous, especially capturing a significant profit today. And they're like, do I want to hold this overnight? Do we think the trend will continue? So you'll have a lot of intraday scalpers close out their long positions, which will put negative selling pressure on the index or the overall market. So one thing I am concerned about looking at the 1-year daily is the stochastic and the MACD. So the stochastic is crossing or trying to cross, as well as the MACD. So, and there is an overall upward trend on SPX. So with this strategy, this is an example of when you may take a loss when you have a reversal against the overall trend. Now, I realize the trend is up. I get that, but I was basing my intraday trades based off the stochastic and the MACD. And generally speaking, the price doesn't reverse until the MACD and the stochastic are both overbought or oversold. And I would highly suggest that you go and look, historically speaking, on SPY or SPX and see historically how has the price pain or the candles or whatever you want to call it interacted in relation to the MACD and the stochastic. And anytime you see significant tops, so bottoms and tops, it will oftentimes correspond with the MACD's tops and bottoms, right? So we haven't even crossed the zero line in the MACD, so that's what leads me to believe this may be a false breakout, but I don't know, right? So you should analyze the chart in what it's telling you, not what you think it will go, right? So live and trade in the present moment. And right now, the present moment is handing me some hard dose of reality, but that's all right. This is part of trading. And this is a wonderful example of what can happen when doing a short-term duration trade, right? So I'm grateful for this opportunity to learn and grow as a trader. And I'm even more grateful that this is a simulated trading environment and not real money. So anytime you're trying out a new trading strategy, you should be using a simulated trading environment like the Thinkorswim platform. And if you don't have a TD Ameritrade account, email me at stockoptionshero@gmail.com. I'll send you a referral link, and I'll get a slight referral bonus when you open and fund your account, and would be incredibly appreciated. Thank you. So going back to the 5-minute, the price is retesting this high around 41.64. So MACD and stochastic tells me that It's possible, but I think that the run is nearing its end. If we get another bearish candle, pretty sure the price will fall back down, probably to the 23.6 or the 38.2 retracement levels. Hopefully by the close. Otherwise, I am going to take a loss because I was not able to roll my option expiring today. Oh, you know what? Is it giving me? Yeah. Looks like it's bouncing all over the place. So why don't we try this? Let's try to take in a 20-cent credit and extend one additional trading day. I'm not convinced that the price will close below 41.60. It's a little close for my comfort. So if I can get one more day of time and take in a credit, I will do it at this point. I mean, yes, the price is only $3.19 away from my short strike, but with as strong as today has been, I want to have a little bit more of a time and price cushion. So hopefully tomorrow is not a big up day. I mean, SPX had a pretty solid day. So I'm hoping that SPX will take a breather for the next few days and kind of digest the macroeconomic situation, at which point my short duration trades will expire out of the money, hopefully. So yeah, looks like the top is in. I just got filled, got one additional day of time cushion on this. Now, will I be disappointed if the price closes below 41.60 and I could have exited my trade that expires today? A little disappointed, but it could have also run much higher, and then I take a $5,000 loss, right? So a little too close for comfort, and this way I get more credit for taking on one additional day of risk. So hopefully SPX has ran enough today to be satisfied for the next few days. So with this rally, I'm going to have to evaluate my bearish or bullish stance. So it also is possible we are just trading in a range until we get a breakout above this high from May 1st or the low from around May 4th. Right? So just channeling sideways. Maybe, I don't know. We'll see. I'll think about this and discuss it in an upcoming video, how to trade the 0 DTE option strategies when we're in this range-bound situation. As always, when you trade a mean reversion strategy, you want to sell into strength or sell into weakness, right? So that is why I sold another bear call spread when we had this bearish engulfing candle, because we had a very strong upward trend and I didn't think there was much upside potential. Now, the price ran another $10 higher, and once again, it's nearly impossible to call the exact top or exact bottom. I can usually guess within 20% of the top or bottom, and I've called the top and we're now starting to lose value, and most likely at this point, SPX will close below 4160, and hopefully tomorrow will close even lower so that my two SPX options are out of the money. So I'm not going to trade SPX until maybe tomorrow afternoon because I've got a $10,500 position on May 18 because I had a May 17 that I rolled into a May 18. So normally I only want to spend $5,000 in capital per day on this strategy, but I'm grateful I rolled. I just don't like having a 10% position on a single expiration date. It's a little uncomfortable for me. And mentally, I think of my paper money account as though it's real money, so that when I transition to real money, it's virtually no difference. So it's just a mental game. I like to play with simulated trading accounts. Not everyone can do that. Some people just rationally tell themselves, I'll be more aggressive because it's simulated. But you're doing yourself a big disservice that way. Okay, so, yep, we got a cross on the MACD, and stochastic's heading lower. We'll most likely touch the 23.6 or the 38.2 at this point before the close, hopefully. And yeah, that is it for today. Real quick. Overall profit loss year to date, 22,835. Got 72 in cash. Net lick, 119,241. Sweep in cash, 133,118. Right now, I'm focused on the 0 and 1 DTE option strategy. And I'm no longer putting on 45 days till expiration trades. I'm just letting my existing positions expire in June or May. I went through and looked at all of my losers. These are all June expiration months. So I've got more time, and I didn't roll any of them yet. We still have a few days before we get to the 21 DTE management day. And then some of these are a mixture of May and June expiration, but not worried about these. I've got open sell orders or buy to close orders, whatever you want to call them, on most of them. This one filled, got 0 under quantity. It looks like I'll need to put a trade or closing order in this. So I took in a 50-cent credit. I'll get out at, say, 15 GTC. Okay. Yeah, so I like to have open orders to automatically get out of my trades. It's much less stressful that way, and it's much more on autopilot. So, yeah. Wait, it's not SPX. I'm like, that chart doesn't look right. I wanted to look at SPX one more time. Yeah, as predicted, SPX will most likely close below 4160, but at the same time, was I willing to risk $5,000 on my assumption for a couple hours worth of trading. I was not. I wanted to give myself more time. So, yeah. Good trading day example. Now I went from being close to 2,000 in the hole down up to $270 profit since the open of my SPX trades. So that is a good example of the power of rolling an option out to a further expiration date. And my rule on rolling is only roll it up to 3 times and only roll it if you can capture a credit. So you should generally not roll if it's a debit, but that's entirely up to you. I just have found that paying a debit to roll a bad trade can be a bad idea, and you're just adding to your losses if the rolled trade still goes against you. So you're just increasing your loss instead of cutting your loss and moving on to the next trade. So, anywho, yeah, it's all over the place now, so I get $10 loss for the day. But thanks for watching. Make sure you subscribe and hit that bell icon and watch my videos of this 30-day option trading strategy for SPX 0 DTE options. Thanks again, and happy trading.